Welcome to CFO 4.0, the future of finance. The CFO role is changing rapidly, moving from cost controller to strategic visionary. And with every change comes opportunity. We are here to help you take advantage of this transition, to win at work, drive your career forwards, and lead with confidence. Join Hannah Munro, Managing Director of ITAS, a financial transformation consultancy, as she interviews key experts to give you real-world advice and guidance on how to transform your processes, people, and data. Welcome to CFO 4.0, the future of finance.
Hello, everybody, and welcome to this episode of CFO 4.0. As usual, I'm your host, Hannah Munro, and with me today is Phil Richards. Phil is the CFO of GiG, and we're going to explore his journey to CFO and a few other topics besides. So welcome, Phil. Great to have you on the show.
Hi, Hannah. Thanks for having me. Looking forward to the conversation.
So we can obviously hear the British accent in there. So tell us a little bit about your journey to CFO. What does yours look like?
Yeah, I mean, look, as you say, I'm in South London, born and bred, but actually, which is reason pertinent to the journey. I'm actually brought up. My mum's German, so I spent a lot of time in Germany speaking German, and I joined KPMG after university. I studied the extremely relevant degree of medieval history at Nottingham, which is great for pub quizzes, less good for accounting, but we got there in the end. And I spent the first year in Germany, actually in Munich. On KPMG had a UK Germany scheme, so I spent a year out there with KPMG. Came back to London, finished my exams, and then spent just shy of 2 years in Sweden with KPMG as well. So I lived out in Stockholm, and then I left after probably just over 6 years at KPMG and went to Shell here in London, and spent a few years in their holding and treasury team in Shell, and then I moved from Shell to a company called Canby. That's a B2B sportsbook provider in the gaming space, and spent a long time there. Joined as Group FC, then did various other roles there, and then moved to Philadelphia with Canby to set up the US office around about 2019 when they legalized sports betting in the US. So that was something very different to what I've been doing previously. It was a lot of talking to regulators and looking at the markets when they opened, a lot of business development. A ton of recruiting, fantastic experience, and so I spent time over there, and then came back to the UK in June 2020. Once we'd set up the office there, and then spent a bit longer at Canby, and then joined a company called Carrero as their CFO. Carrero is a cybersecurity company listed on AIM, and spent a really lovely 2 years there as well. But and the company is absolutely flying on AIM at the moment. It's been fantastic. But really, I really like the gaming space, and it was always one that's quite close to my heart. So when this gig opportunity came knocking, I was gutted to leave Carrera because it was really work unfinished. I had so much more I wanted to do, but I had to be a little bit selfish on this one, and it came knocking. I'll talk a bit about gig later on, because it was just, there was so much going on all at once. It was an IPO, it was a company split. It's basically, they brought a new management team who were top level. So it was everything that I wanted to do as a CFO. So I, it was with sadness I left Carrero, but great excitement, and it's been quite a whirlwind at GiG so far. I've been here for 3 months, but I guess I've kind of been looking in the background, working with GiG really since March because of the IPO. So helping through that process for a reasonably long time, and it's obviously an area that I know very well. So yeah, look, that's a very brief nutshell of how I got here. There's obviously lots of ins and outs, but I'm sure that's interesting, probably only to my mum and my wife. So.
Well, you'd be surprised, right? So I always find it's really interesting, I guess, the perspective and the personal side, and why people make the shifts from different roles. So tell us a little bit about sort of why gaming. What is it that excites you about that industry?
It's great because it's fast moving tech, but in a really exciting space I'm really interested in. I love my sports. I'm sports mad. I'm obsessed with it. I don't mind a flutter or two either. And so I find it quite it's a really fun environment. Like it's everyone here is kind of super passionate about it, and there's so much innovation. There's so many startups coming out all the time. There's so much you can do with it, and the engineers love it as well because the tech's always changing, and there's so many markets that haven't even regulated in gaming. So like there's so much more to come, and that's why it's really exciting. It's one of those industries it feels mature because in the UK it is a mature industry, but everywhere else it's like amazingly immature. As I said, the US only legalized sports betting in 2019, but that wasn't even really legalizing it. It was just making it not illegal. Each state then had to regulate to make it legal in that state. So you've still got the likes of California, Texas, where it's not legal to do sports betting, for example. iCasino is only legal in 5 states. I mean, there's a ginormous market out there in the US alone, let alone none of Asia is regulated, let alone, South America. So it's exciting. There's always something different and new coming along. And I love that, it's really fun. It's just a fun place to be.
And you mentioned the IPO. So tell us a little bit about that experience. And, is that something you can talk or share with us? You're not sure where you're at in the process at the moment.
No, well, we did it. We rang the little bell on the 1st of October, so it's fresh in the memory. We IPO'd on the First North in Sweden, which is their equivalent of AIM on the Swedish Nasdaq market. Yeah, I mean, look, the IPO day was fun. Build up was a bit of work, and to be fair, I came in halfway through the process, so there'd already been a lot of groundwork done before that, and it was quite complicated because it was a distribution from another company that was already listed. So effectively, the company we spun out of had 2 main verticals. One of them was the media and affiliate side of the gaming business, and one of them was platform and sportsbook, which is the bit that I do. And what the board decided was that the companies would be much better if they split, and the platform and sportsbook effectively spun out of the media business and IPO'd on its own. Now, I think that which is absolutely the right thing. There weren't many synergies between the two. The platform and sportsbook business had been horrendously underperforming, and the media business had been like absolutely smashing it and making a lot of money. So we were kind of a millstone around their neck. We weren't really being treated in the kind of operational focus we needed. So it's absolutely perfect for both companies, really. You've got the focus, you've got the independence, you've got the autonomy, and we can then generate, we can provide the service we need to our customers and work on the product, etc. So it was a super smart move, but it just took a long time. And I think one thing that people maybe didn't really realize was that just because you're splitting out of a listed company, it doesn't make it easier, right? It's not like a kind of take the assets, divide by 2 and you're both listed, ta-da. It is a genuinely new IPO process. We're a new company. You have to do everything new. And it's a little even more difficult than that because you effectively have to replicate everything. You have to replicate every function. You have to have a new board, et cetera, et cetera. So there's a lot more work than I think was originally anticipated going into this because of what you have to do. And the company that listed originally was listed in Norway and Sweden on their stock exchanges, but it was listed because a shell company was bought that was already listed in Norway. So they didn't have to go through that process. So you don't necessarily have all the infrastructure in place that you would need to do it if you were to do the IPO now. So you've kind of got to take a complete, clean the stables out, as it were, and just really, really build from the foundations up. And then the first question was, well, we do go in the main market, and you're kind of like, well, look, we should walk before we run. Look, the main market maybe is an aspiration, but it's not doable. It's not a feasible project to go there, and you don't need it. The market cap's going to be so small that it's just not going to be important for us to be on the main market. And having been it can be, it was also listed on the First North in Sweden. I know the stock market very, very well in Sweden, and the investor base is basically the same. You don't really get benefits of the main market at a company our size. So it was those kind of conversations that I think hadn't really been fully fleshed out. And I don't think you really can fully flesh them out until you start going down the process and think, oh shit, we've got to do this and that and that. We're a Maltese headquartered company, so it's a little bit difficult as well because you've got the Swedish Stock Exchange, you've got the Maltese regulations, you've got all the gaming licenses you have to do. And so there was quite a lot of complication going into it. But it's done, but I feel like it being done is like, I hate to say it to all my team who worked tirelessly to make this happen, but we're kind of at the start now, because now is really when we have to prove ourselves. Previously you can hide behind other numbers because you're part of a bigger group, but you're a standalone company and we have to deliver. We've gone out to the investor base pretty aggressively and said, listen, this is where we're going to be next year. And we've got really good visibility over that. But you've got to deliver on that. I mean, it's point, you can tell investors anything, but if you don't deliver on it, then it's completely meaningless. And you only have to miss once, all credibilities go. So we really need to focus and be laser sharp in the next 12, 16 months to prove ourselves to our investor base.
And I'm going to pick up on that in a bit, but just tell me, how far through the process of, I guess, deciding where you were going to list were you when you came on board?
Well, we hadn't decided whether it was going to be main market or the First North. That was the bit that sort of, with conversations that I had with everyone, that we managed to, work out that the First North was the right thing. It was always going to be the Swedish Stock Exchange. That wasn't going to be a question because of the fact that the historic investor base is predominantly Nordics, Swedish and Norwegian. And there's quite a significant, unlike an IPO, this is treated as a vanilla IPO going from private to public. This is treated like a distribution from the parent company. So there are tax consequences if you move out of that market. So it was never really going to be on the table whether if we were going to London or somewhere else like that. That wasn't really the question. So the question was just main, First North, not do we do Sweden or somewhere else.
And you mentioned with obviously it was Sweden. What exchanges have you gone to IPO before, or is this the first time that you personally led the IPO?
No, so this is the first IPO for me, which is exciting. Previously Carrero, I was CFO, that was an AIM listed, so here in London on the London Stock Exchange. Previous to that was Canby, that was also in Sweden on the First North. But yeah, this is why it's so exciting. And this is one of the reasons why I had to take it, because it's like, listen, you don't get to do many IPOs. You really don't. It's like, and I'm not sure many people want to do many IPOs either. I don't, but for me, when I look at, and I guess, maybe this will come out later on, but kind of if I look at the sort of check boxes that you really need to have done to regard yourself as having the experience to be fully fledged CFO, an IPO is a really important one. And it's one that it just doesn't come around that much, like for obvious reasons. It's a lot of work and it's quite a big risk.
Was there anything that surprised you about the process looking back?
I mean, quite a few things. I think it surprised me a bit that you don't get the sort of absolute green light from the stock exchange until like a few days before. So you're still kind of waiting there 2 weeks before, thinking like, oh, is there anything that's going to come up? Like, you kind of know there isn't, but you don't get like a letter a month before saying like, yeah, you're fine, IPO then. So it's a little bit like you do all this work and then you're waiting for that final okay. And I'm not sure what it's like on every stock exchange, but I think it's pretty similar, because you obviously have to, you have to provide financials within a certain period of time, and all the reporting has to come out, and it's quite structured when you do it. But there's a lot of activity right at the end of the process that, you have to hit this timeline for this, make sure you do, AGM, EGM, etc., before then. So there's quite a lot of just logistical stuff. And then you're still hoping and praying that you get that final nod from the regulator saying, yeah, we're good to go on 1st of October, crack on. And then on the actual day of listing, it's quite funny because you see the market open, and we had quite an interesting one, because we effectively, if you were a shareholder in the old group, you just got a share in us. So you effectively kind of, and the plan really being that, the thought process is 1 + 1 = 3 type thing. You have a share that's worth X in the old company, you've got a share worth Y in the new one, and those two together are worth more than the old group was, right? That's basics of kind of what we're offering to the shareholders. But so you don't really know what the market reaction is going to be as to what your valuation is. So on day one, when the shares open, we hadn't set a price or anything. We'd kind of gone out there and we wanted the market to make it what it was. So we had an idea in our head of what they might value it at. But I remember the first bid came in and it was something so unbelievably tiny that we were just like, I really hope this isn't it, because we're really stuffed if this is a bit. I really don't know how that bid went through, but obviously the market share settled on a share price that we thought it would. To be honest, we thought it would be £5. It ended up at £5. So all was fine, but it was a bit of a kind of, this would be interesting, because a lot of the time you'd engage someone beforehand to make the price and make the market and be market makers, and we didn't do that. So we were a little bit at the behest of the market, really.
And talk us through the process. What did that look like from you? Obviously aware that you came in sort of midway, but what was the general process that you and the team went through in order to get listed?
So I think the first thing the company had to do was obviously segregate the entire company into two, right? Split the company into two pre-listing for a long time, make sure that there are no crossovers, and being whether it's people or infrastructure, IT, whatever it is, make sure the hosting's on a different platform, like the whole lot, right? So that's really important. So you've got that. You are effectively acting as two different companies. We had different floors in the building and all sorts. So there's no cross pollination between there. So that was really important. And then it's to go through and look at the company and say, okay, well, what processes, what controls do we have to have in place to make sure this actually works, as a standalone company? And then, obviously, but before all of that, it's like, well, what's the strategic rationale? Right? You've got to sell it to the shareholders first. So maybe if we dial back and say, well, first we have to have a conversation, be like, why are we doing this? What's the point? What's the rationale? What's in it for the shareholders? Why would the board support this? And then you come through that, and then you say, okay, well, how are we going to do it? So as I say, you've got to split the company, set up the controls processes in place. And then we had to, generate pro forma accounts for many different periods that we hadn't done before, because we'd just been part of an old group. So we had to basically imagine we were a new group already. That's quite a lot of work involved with that. And it's those type of activities. And then there's a lot of legal process and looking at the shareholders and what it would mean to them if they get a distribution for another shares. It's that engagement, explaining to the shareholders why this is a good thing, so that they then vote for it at the AGM or the EGM. It's a lot of educational pre-split roadshows, and talking to the customer base, and a lot of kind of administration of, making sure that, who's keeping the brand, for example, are we keeping GiG? The media side keeping GiG? Thankfully, we kept GiG. They rebranded, which was great for us. And a lot of that type of thing, who owns the IP? Where's the tech development done? So I think it was a little bit more complicated than you would if you had a vanilla IPO, because you don't have any of those questions. You don't have to do that side of things. What you really have to do is make sure you have the controls, the processes, the corporate governance in place, the reporting structure. That's probably more of your bread and butter IPO stuff than what we had to do on top of that. But that stuff's obviously fundamental, making sure that you have that reporting structure in place, that you have the corporate governance, that is all in line with what the NASDAQ would require as well.
And talk us through the timeline, because obviously there's a huge amount of work involved in all of that. How much of that was happening in like the 3 to 6 months before the IPO, and how much of it was a sort of a prep piece that happened months or even years before?
So I think, they started the process in 2023, right? So it's been quite a long process. I would say, again, this is because it was a lot more complicated than a normal IPO. Like, it really, really was. Like, I think that if you were going from, having a decent company that was privately run to an IPO, I think you could do it a lot quicker. But because of the way that we had to basically split the companies first and then run independently, so that started through in 2023. But I think, like everything, there's massive flow activity, some lulls, massive flow activity, some lulls, and in between then you've got your normal reporting you have to do to the stock exchange, right? Because it's quarterly reporting to the stock exchange anyway. So you've got all of that coming in. So I think the thing is, if you as a finance team can focus on the IPO as your sole thing you have to do, it probably doesn't take anywhere near as long. But if on top of that you still have the requirements of a listed company anyway, and you're trying to do an IPO of another company and split it, that really compounds. Like that is a lot of work. So hence why, there was a lot of legwork that had to be done in 23. You've got to engage the auditors to make sure the auditors are auditing this new group before it's even a group, as it were. Set up all the companies you need, register the companies you need, etc. We have to talk to the regulators, the gaming regulators, to make sure they understand when the licenses are going to be held. So Yeah, so 2023 onwards was really activity. I wouldn't say there were too many lulls in it, but there were certainly areas where there was a lot of activity, and then it's BAU, then a lot of activity, then BAU, and you always get questions from the auditors, from the regulators, from the advisors, etc.
And how much of this did you resource with your sort of existing finance team? And did you bring any external resources in to support? How did you approach?
I, I mean, diplomatically on this one, a lot of external advisors were used, is what I would say. I mean, mine not to judge as to whether there were way too many external advisors used that didn't do what they needed to do, but you can take from that what you will. But yeah, no, I think you do need external advisors for certain parts of it for sure. You can't be doing all this in house. Whether all external advisors always act in your best interest, I think is a big question mark on that, because you as a company have obviously a slightly different view as to what you want to do to an external advisor. And a great example is main market versus secondary listing, right? Versus, it doesn't really matter whether it's LSE or AIM or whatever. And there are some people that might push you one way or another when it may actually not be in your interest to do that. So healthy skepticism, I think, with advisors would be my word of caution. But we did a lot with advisors, and we did a decent, to be fair, we did quite a lot in-house as well. But I think that the whole Malta versus Sweden and needing to understand Swedish regulators when we have no one in Sweden, we have no finance team in Sweden, that obviously means you are quite heavily reliant on advisors, particularly in Sweden, to do a lot of the heavy lifting.
Now, for the £1 million question. What is the best finance software for your business? Is it A, Sage 50? Is it B, Sage 200 Standard? C, Sage 200 Professional? Or D, Sage Intact? An impossible question to answer without a lifeline. But we have the perfect lifeline for you. Our free quiz, which Sage product is right for you, will tell you which product is the best fit for your business in just 5 minutes. All you need to do is head to www.itassolutions.co.uk and answer a few simple questions.
And what advice would you give to maybe a CFO of a company that's going to IPO about things to think about when deciding which exchange to list on? What, I guess, from somebody that's been in and around it, what are some of the things that you would think about?
I think you need to work out who your company would appeal to. Like, where's the appetite for your type of stock? Because, say, for example, gaming. Gaming is quite niche in a lot of stock markets, right? But there are some stock markets that really understand gaming. So Sweden is one. There are an absolute plethora of gaming companies that list in Sweden and on the First North in Sweden, actually. So there is a very educated investor base that you can tell the story to. They'll understand it. They understand the principle. London's the same actually for gaming. London has a lot of good gaming expertise, but I would say in Europe maybe there's not so much the case. If you're looking at the US, like Carrera, where I was at before, we were listed in London, but it was very much US focused in terms of revenue, and therefore spent a lot of time in the US. We're listed on the OTC, the over-the-counter market over there, just so that there was a US ticker, and that went down really well because you had a US customer base. And therefore, the reference points you have for your products are US related. So, you could go out to the US and say, listen, one of our main partners is a company called Akamai. Now, Akamai they're massive globally. I think they operate like 1/3 of the world's internet traffic or something crazy like that. But they're not a household name in Europe. They are in the US. So when you're telling that story, you have to think about, right, what investor base is going to understand what I'm talking about? And therefore, where am I going to be pushing against an open door versus really banging on the table in a market that doesn't understand what the product is? So I think it's really important to look at that and say, okay, well, where's my story going to resonate with investors, and sound them out. Listen, there's so many really good advisors out there that you can talk to say, look, I've got this story, I'm thinking of listing. Do you have anyone in your network that's interested in this type of product, in this type of service, whatever it may be? And if there's a kind of not really sure type thing, then you probably know it's might be not the right market. But if they're like, hey, listen, I'll set you up with a couple of funds, a couple of investment managers, whatever it might be, why don't you start talking about your story? And then you can get a good idea what the sentiment is on the ground. Because let's not beat it around the bush. I mean, the stock market is still pretty depressed. It's pretty tough out there. It's a tough life out there. And particularly if you're looking at one of the secondary markets, whether it's AIM or somewhere else, it's difficult to make your name known. So you need to really, really want it and really understand whether there's demand for it to go for it, because otherwise you will languish in amongst one of the millions of other stocks who just sits there doing absolutely nothing. And you need to be willing as well to put in the legwork after your IPO to keep yourself relevant, right? That's the really important bit. Like the IPO is one little bit of the process, right? The process after that is to, deliver on what you said you're going to do. Obviously, number one fundamental, but to keep the story fresh, keep people interested, keep investors engaged, keep telling the story, keep updating it, deliver what you say you're going to do. And you have to have the capacity to do that, because otherwise the IPO is pointless. So you can't just be a one and done and then just hope that the stock market picks up and it's like, oh, this is a great company. Like, they're not going to do that. Like, there's so many companies listed. You have to make yourself better than other people. You have to look. I think people make a bit of a mistake when they look at the market and they think they're competing against other companies that do what they do, right? That's not who you're competing against in stock exchange. You're competing against the same market cap bracket company that is in the same sector as you, maybe. Like, if you're like in gaming, I'm competing against every other tech company that's a small cap tech company. I'm not competing. For sure, there's other gaming companies out there, but an investor has a finite pool of money they want to put in something. And normally, unless they're really big, they're like, I invest in small cap UK tech stocks, right? They're not saying I invest only in gaming stocks, I invest in cybersecurity stocks. It's like, no, I like tech businesses, I like SaaS businesses, I like the ARR that you can get from it, I like the visibility, yada, 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 right? So you've got to look at these companies and be like, okay, well, am I going to beat these on the market? Not product-wise, because you're not in the same product space, but am I going to is my story better than theirs? And therefore, can I deliver better growth than them? Will I attract the better investment than they will? That's who you're competing against. And I think that gets missed a bit. You get so obsessed by your competitors and mixing up your kind of commercial competition to your investor-based competition. And those two can be similar, but they can be wildly different.
It's almost like you've got to approach it like a marketing exercise, understand who your customers are in that market.
100%. I feel like I'm a salesperson, like, so often. Like, you really do. Like, you really do end up being quite salesy. And I think, but that's where it's really powerful when you can work well with a CEO who's also very good at telling the story. I think you've got to, again, like, investors like people that can articulate the story but are passionate about it and can really, they don't want, maybe they do want a CFO who sits there and says nothing at all, but that's not really what I've seen. They want to demonstrate they buy into the CEO. Let's not lie about it. We can't pretend that the CFO is the reason why anyone would invest into a company. But if you have a decent combination together where you've got a very articulate, passionate CEO that has a great vision, you've got someone behind them that they can say, okay, well, this guy actually understands the numbers. They know, he knows he's got a proven track record. The two of that together is a very powerful thing. But yeah, you do end up being pretty salesy quite a lot of the time. You are right.
Well, before we get on to almost the story post-IPO, is there anything that, looking back on, you would have done differently? What was your key learning and what would you take forward to the next IPO?
I think there's a few things that maybe if I'd have done it from the start, maybe I would have tweaked and done a little bit differently, for sure, because everyone was kind of feeling out the process, so it wasn't really. It was, as I say, by far from straightforward. So it was quite a difficult process. Going forward, I think that I would probably. Maybe the point was really to make sure the finance team were fully involved in everything from the start and we fully communicated everything and everyone was aligned, because that's really, really important. And then you work out where are your gaps, where are your skill set gaps, and then, okay, how do we need to use advisors to plug into that to make sure that we're covering everything? And, let's not be over ambitious. Let's make sure that the timelines work. But I think every IPO is probably so unique that you get a few generic learnings from it. But I'm pretty certain that your experience is great in terms of kind of how it works, but there's going to be so much you have to work through depending on the company. So I'm sure that the next IPO I do will be something wildly different, and I will have zero relevant experience for it.
That's the way to look at it, isn't it? I love that. So let's just talk about, like, I guess post IPO. You talked very passionately, actually, and I love that, about almost the role of the CFO in engaging with investors and helping the CEO to present the story. Tell us a little bit about, I guess, how you approach that piece, that investor management and that relationship building almost with those investors.
Yeah, absolutely. I mean, for me, the CFO is fundamental, because investor relations, most small cap companies don't have an investor relations department. So it's effectively, it's like, right, is it you or is it CEO? And the CEO doesn't have time to be doing this. And for us, it's really important, because the investor relations calendar obviously links very closely to the reporting calendar as well, and where and when you do things. So for me, I like owning the investor relations piece. I like that coming in underneath me, so I can then sort of talk to the CEO, we can work out a plan together, and then we can execute on that plan. And then you end up being the kind of, you organise the road shows. Well, you make sure someone organises the road shows basically, and go around, because you need two of you. I think one of you, it's a lot of stress as well, I think, for one person. And it can be quite, if you're sitting in 8-9 investor meetings a day, you kind of need someone to play off against you, because just going in on your own, that's a tough gig. It really is. And I really admire, particularly the founders that have to go around and do that on a, God knows, every week basis. So it's a tough thing. So I think two of you is important. I think having someone who can talk about the numbers and the guidance on the numbers is really important as well, because the CEO then is then free to talk about the bigger picture strategic part of it. And you can kind of bring people a little bit back to earth with, okay, well, this is actually what the numbers look like. So I think you can be a very strong team if you work well together. But for me, that means that as a CFO, you need to be really engaged in how the IR is going. You need to be talking to your head of marketing all the time. You need to be owning those relationships with, if you have an outsourced IR person, for example, or if you're, you need to own the relationships, obviously, with the brokers, with the analysts, with everyone, with the banks, with whoever's covering you. Really, really important. That nothing slips between the net, basically, between you and the CEO, and you want to make sure that you're all over this. It's really, really important.
And you mentioned quite a few, like, individuals, and like you said, you're working with your head of marketing. But are you getting out, or have you had in the past outside guidance on who you should be speaking to? How do you get, I guess, in front of the right people to have those good conversations and to make sure that your story's heard?
It's a little bit of hit and miss. Sometimes, you are going to have some misses. You're going to talk to some people that are definitely not the right people to talk to. I think, over the last few years, I've built up some really good external advisors as well that are really good to talk to, and people that, will happily sort of, invest in the relationship for the long term, and, kind of say, listen, we'll try and we'll run with this story. And if it works, then let's do something together. If it doesn't, then, no harm done. We do use an outsourced IR PR firm, which I've brought on board, and that is really helpful too, because marketing is such an all-encompassing role, right? And you're always demanding more of the head of marketing. I mean, it's a super tough job, because you've got sales badging on at you. You've got the product guys that need you to market the product. You've got myself. You've got the CEO. Everyone's basically on you with, like, I want this, I need this, I need that, I need that. And investor relations marketing and market marketing, to the stock exchange, is not necessarily the thing that people sign up to be head of marketing to do, right? That's not really in their wheelhouse, right? And some people love it, some people don't, but some people need a bit of guidance on it. So being able to talk to their marketing, explain, listen, this is why it's like that. Like, we can use some commercial marketing, but it's a different message. The cadence is different. The tone sometimes is different. The product description, all these things, the language you use can be different. So kind of, and that's where having someone external as well to kind of help make that message more investor relations-y is quite useful as well, because you can kind of take a really cool bit of marketing and tone it a little bit more towards the stock market, for example. So that it's just such a key relationship. Like, it really is, between all of those different areas. And then you need to be able to produce something for the CEO, which is both, investor worthy, and also you can say, listen, we're going out and talking to our customers about this, or, this is how we talk about the product, etc.
And amongst all of that, I guess, the role of the CFO is to make sure that he's talking the numbers, giving a good guidance as to where you're going to be. How do you find the right balance between, stepping up and being seen as a great investment, but also making sure that you as a business can hit the numbers? How do you approach it?
Yeah, it's really important. And I think that there's where one could fall down as a CFO for sure is doing too much of one either way, right? I mean, it's really important. You can't get bogged down, but equally you have to know the numbers and you have to be fundamentally understanding what's going on with the finances of the company. You can't all sit up here in a cloud and talk big picture, particularly not in a small or mid cap company. So it is always a balance. It's really helpful to have a really good group FC. It's really, really important. So that you can rely on them to run the team, but you then have to make sure that you're diving in enough into the detail. You understand technical accounting that you can rely on those numbers, but that you're not so far in the weeds that you can't pull your head up and say, okay, well, what's the bigger picture here, guys? What does this actually mean for our long-term strategy, and how am I going to talk about this to the market? Because ultimately, the problem with finance is a lot of the numbers that you produce are old as soon as you produce them, right? So you need to understand you need to understand enough about them to realize what does that mean from us going forward. Bear in mind that this is a historic number now, but what does that story mean? And then you've got to articulate the story, because as a CFO, you really are about articulating the story that the numbers mean. That's where you'll come in, right? You've got to understand the numbers, you've got to make sure they're right, but you need to articulate what does that mean to the business and steer it based upon that and your understanding and your experience.
So what does the plan look like for the next 6 to 12 months? So you've gone to IPO, right? You've rung the bell. It's all very exciting, but as you said, the journey starts now. So what does the next 12 months look like, and how do you know it's going to be a success? What are you looking for?
Well, we kind of started from scratch, really. There's a lot of stuff that we needed to clear out from some legacy items. So we're really, we're rebuilding everything really from scratch. So I look at this company as a brand new company. For me, this is a tech startup. This isn't a company that's been listed for 10 years and basically split in half. This is a tech startup, and we need to act like that accordingly. We need to be agile, nimble, and make sure that we are constantly on the front foot of development. So from my perspective, it's obviously about making sure we're hitting the numbers. That's fundamental. We've given some very detailed guidance to the market, which is probably quite unusual. But we've already said where we expect to be at the end of the guidance that we think for the end of 25, both in revenue and EBITDA. So we've got some pretty, we've got some good targets out there. Targeting 38% revenue growth is going to be no mean feat for next year. But for me, and the nice thing about the business that we're in is that you get really good visibility about revenue pretty early on, because you sign it. Much of it is on a revenue share basis. So you sign a reasonably long-term contract. You have minimum revenues, revenue share on top of that. So you know what your minimum revenue is going to be from a customer well in advance, right? And this is a 3-5 year deal. You sign enough of them, and you've got some really good, as I say, that you're locking in 90% of next year's revenue already because you've already signed it up. And it's just about going live. So but it's about working with the commercial team and the operations team to realize that as well. There's, in the gaming space particularly, there's a lot of regulatory stuff that people need to go through. So making sure that we get all the timings right for the launches, so I know when the revenue's coming in. On the cost side of things, listen, I find that's more of an easy lever, to be honest, than the revenue side of things. But I think what we sometimes forget is that you can do whatever you want with the cost base, but if the revenue doesn't come in, the company's stuffed anyway. So, it's like people tinker around the edges, but there's some fundamentals you need to do. For me, my number one goal has to be helping the commercial team to realize, what they're expecting to do next year. Because, as I say, I can play around with the cost base a bit, but the revenue's got to be in, the customers need to be signed. It's simple as that. And on the cost side of things, I think it's really, it's making people aware. That's why I think having that new tech startup mentality is really good, because people are aware that, listen, we are scrapping. We do need to make sure that we are being sensible with our investment decisions, that people are doing a decent ROI assessment on everything that they do. That is really important. And instilling that mindset is very important, because people, fundamentally, in my experience, people are actually pretty good at being cost conscious. Like, you don't have to be heavy handed on cost conscious if people understand what the purpose is. Like, it's very difficult to say that if, you're generating, 50% plus percent margins, right? To say, oh, we've got to squeeze every last penny out. People don't quite understand that. But in our business where we're actually losing money, it's quite easy for people to see, okay, I better actually make some sensible decisions here. So, whilst guiding that, making sure the mentality is in the right place, but really helping the commercial team to realize their part of it, because that's going to be what makes or breaks the company in the next 6 to 12 months.
Amazing. And I guess, if you had to give, your top tips for anybody going or looking at going through the IPO, what would you say? What would be your advice?
I would say, preparation is absolutely, obviously it's absolutely key. It's not like a kind of snapshot decision you make. Is this right for you? Do you really want it? A lot of people, I think, would maybe, if you ask them, you're seeing a lot of people like delisting from the stock exchange. There's been quite a few take privates and whatnots, which, you sort of think, okay, did that company really need to be on the stock exchange at first place? Is it the right thing for you? Is there a trigger event that you need from this IPO? Do you need to raise capital, like, for example, where IPO might be the right thing to do for that? Is it something that will make you more attractive for a sale? Is it something that, your employees might engage with because they get stock options that they can see working on a stock exchange rather than a kind of phantom option price, but you don't know what the company's worth? Those kind of things. Like, if you tick all of those boxes, then maybe, but I would certainly make sure you do a proper cost benefit analysis of the IPO, because it's no small amount of work to do and to keep up as well, right? And I would say, the UK is maybe a bit easier because you only have to report every half year, but quarterly reporting, for example, in Sweden, like, that's quite a lot on the finance team. You have to have the infrastructure in place to basically continually churn out reports. So, you really have to want it, and it has to make sense. You have to be able to articulate why you want it. Like, if you can't articulate why you need an IPO just because you think it would be good to be listed, probably not the right decision for your company.
I love that. That is some really sound advice, Phil. Thank you for that. And if any of our listeners want to learn more about you or about the organization, where is the best place to find you guys?
So the organisation you can just find online at www.gig.com. So the company's just called GiG. Pretty straightforward. We're on LinkedIn. Whether we have other social media, I'm sure we do, but I don't. So that's probably why I don't look at the rest of them. We're listed on the Swedish First North, so you can always follow us on our GiG ticker. I am, myself, I'm on LinkedIn, so you can come find me, ping me. I'm happy to, connect, and any messages anyone's got, then really happy to answer any questions people have.
Well, thank you so much, Phil. I've probably got a billion questions I haven't managed to ask, and I'm sure there'll be some others. But so shout out to all of our listeners. If you have some questions that you feel like we need to answer on this show around IPOs, the process, listing, then please do send them through. A massive thank you, Phil, for joining me. Genuinely interesting to hear your experience, and also excited to follow your journey. I'd love to speak to you in maybe 12 months and see how things have gone, and talk about that process. Well, I'm sure it'll be a great one. So thanks so much.
If it's gone terribly, I won't be connectable. If it's gone great, we can chat again.
That sounds like a good plan. So, but I'm pretty sure from what you've told me, it's going to be a cracking 12 months. So yeah, thank you so much for joining me. And yeah, to our listeners, if you've enjoyed this episode, of course, don't forget to rate it, like it, share it. And I'll see you next time on the CFO 4.0 podcast. So I always find it really hard to explain to people why they should choose ITAS as their financial transformation or Sage partner. So rather than me tell you how awesome we are, I'm going to let our customers do it.
So we decided to go with ITAS because when we were looking for a partner, we felt that they not only took the time to understand our business and they knew the needs of everyone on the team or everyone that would be using the system, but they also were very transparent in kind of what they could do, what they couldn't do. And prior to having us, sign anything or make any agreements, they held meetings with us to walk them through our processes and our business, so that they really understood everything that would need to be done and give us realistic timelines as well. And another thing was because we were so new and we didn't have a current system going, we were looking for something that we could implement rather quickly, but also do it correctly. And we felt that iTask would be able to achieve both of those in terms of, understanding our business and implementing it how we wanted it, but also doing it in our rather quick timeline.